register or the first delegate.
Get ready to dive into excitement and fun with puzzles and quizzes. As chartered accountants, I'm sure we are really good at it. Let us check that. Free health checkups. Again, during the tax filing, returns filing time, our health definitely has gone for a toss and it's time to get it checked. And cultural extravaganza, our institute has never fallen back when it comes to organizing these cultural events. Be ready with your family to attend these events with Mr. Rishabh Shetty, an actor cum director, Reggie Gopinath with wonderful violinist and music mansion band, followed by a delightful family dinner along with our themes Jignasa, Quest for Knowledge, Adyata, the Empowerment.
Request CA Arun AV, the Regional Council member, to welcome our panelists for the first technical session through a floral bouquet. We have CA Nilesh Shah, the MD of Kotak Mahindra Asset Management Company Limited. A warm welcome to you, sir.
A round of applause, ladies and gentlemen. We have a couple of health counters as well, and I think clapping is good for your health. Can we have a big round of applause?
CA Vikram Kothari, MD and CEO, NSE Clearing Limited. A round of applause for the panelists today. Mr. Ishan Bansal, founder and CEO, Grow. And our moderator for the panel, CA Sudhir Bheda. A warm welcome to all the panelists and the moderator for this first technical session on India's growth journey, capital markets in Amritkal.
May we now request CA Sridhar Mupala, Central Council member, to give his opening remarks for this wonderful golden session.
A very good morning. First of all, I welcome all the dignitaries and all the participant delegates for the 56th Regional Conference of SIRC of ICAI. I once again welcome all the delegates for the 56th Regional Conference of SIRC of ICAI. Indeed, it's a pleasure to host a regional conference every year, putting all the members from South India on one platform, deliberate and understand the happenings in the profession, conveying the upskilling to the profession and the members at large. So today, we have with us the dignitaries on the dais. Nilesh Bhai, welcome Nilesh Bhai for this session. Whenever we listen to Nilesh Bhai, we really understand how India has grown in every 5 years or 10 years. Nilesh Bhai, this is the 4th session I am attending yours, and really proud to have you. On behalf of ICAI, I wholeheartedly welcome you. With us, we have Vikram Kothari, Managing Director and CEO, NSE Clearing Limited. Welcome, sir. Today, a lot of people sitting over here are part and parcel of the investors, so would be happy and delighted to listen to you. And with us, we have Mr. Ishan Bansal, founder and CEO of Grow. Welcome, Mr. Ishan. And also with us, we have Sudhir Bheda, the moderator for the session. The first and the foremost session, capital markets in Amritkal. I'm sure a lot of members sitting over here might have seen the transformation phase of an Indian stock market and how healthy and strong we are. Today we are crossed $3.6 trillion value, aiming an Indian GDP of $30 trillion. So what a movement we have. It's the biggest professional opportunity for any professionals in India, and it's the best time of 25 years. So I'm sure that today's discussion with our esteemed speakers, a deliberation goes on, and an insights on the capital market, especially in the Amritkal period, can be understood by the members. So once again, I thank you, all the speakers and all the delegates. Once again, a grand welcome to the 56th Regional Conference. Thank you very much.
Thank you, sir, for the wonderful opening remarks. Over to CA Sudhir Bheda to take over the panel discussion.
Yeah, good morning, and thank you SIRC of Institute of Chartered Accountants for giving us the opportunity. Thanks to the Southern India Regional Council. It is said that don't bet against India. Amrit Kal has just begun and has long way to go. I will give some data points. There are a lot of data points, but 3 or 4 data points I will give. 70 crores Indian people will join middle class by 2030. That means in the income bracket of 5 to 30 lakhs. 1400 million strong population gives us the demography advantage. Median age of India is just 28.7 years against 38.4 years for China and 48.6 years for Japan. Energy consumption is going to increase from 800 watts to 1300 watts. US is 9,000 watts. India would be $10 trillion economy by 2035. And we are the luckiest person on the earth. Now why we are luckiest person on the earth today? Because in the history of mankind, only 2 generations have seen this transition from $4 trillion to $10 trillion. One, China, and second, US. China's economy has moved from 4 trillion to 10 trillion from 2008 to 2015. And US economy has moved from 4 trillion to 10 trillion between 1985 to 2000. So only 2 generations have seen that, and we are the 3rd luckiest people who will see this transition from $4 trillion to $10 trillion. So when US went from 4 trillion to 10 trillion, there were some segment which has seen exponential growth. And the market cap of US has went up by 10 times in that period. So now imagine why we are calling this period as Amrit Kal. With this remark, I will now switch over or start with the panel discussion. We have eminent panelists among us, and I will start with Nilesh Bhai. Nilesh Bhai, you are the Sherpa of the modern Indian economy and its growth story. Where do you see Indian economy poised in next 10 years?
Good morning, everyone. Thank you, ICAI, for inviting me over here. If we look at Indian economic history, before Britishers came and colonized us, we were number 1 or number 2 economy in the world. And which is why Vasco da Gama or Christopher Columbus came in search of India. R. Rambai Shambai didn't went in search of US or Canada or UK like it is happening today. But that 200 years of colonization made India's growth rate 0. Our per capita remained same in 1947 as it was in 18th century. From 1947 to 1990, we wasted opportunity. There was not even one combined period of 3 years where our growth rate was above 7%. But better late than never. Since 90, our economic independence journey has begun. We have many periods where we grew at 7% plus for a period of 3 years. In the beginning of this century, we were coach to the global growth train. Incrementally, we were contributing 2 to 3% of real global GDP growth. Now, along with China and US, we have become engine. we contribute 6-7% of incremental real GDP growth to the world. And over next 4-5 years, it will be double digit. So this is the journey of India becoming coach to engine of global growth train. And we expect this to continue. Why will that happen? One, earlier talent of India used to migrate abroad for better opportunity. A Sundar Pichai didn't stay in India. A Satya Nadella didn't stay in India. A Shantanu Narayan didn't stay in India. They all went abroad for opportunities. Even when we go to Western world or Middle East, we find so many chartered accountants there who migrated in the 60s, 70s, 80s, 90s. Today, talent of India is staying back into India. When talent stays, tomorrow's Microsoft, tomorrow's Google, tomorrow's Adobe might be created in Bengaluru. Second, talent requires capital. Many of us started on humble background. Our parents didn't have capital, and hence we became chartered accountant, started doing job, and excelled on professional side. Today, there is private equity venture capital available. If you have business idea like Ishan, there are private equity venture capital available to back. There was a time when Mumbai, Gujarati, Marwadi was stockbroking. Now the second largest broking company in India is from the city of Bengaluru. So talent is getting combined with capital. But talent and capital also requires infrastructure. Without infrastructure, how will you grow? Between 2014 to 2024, we have doubled our infrastructure. Roads have gone from 82,000 kilometers to 165,000 kilometers. Airports have grown from 70 to 150. Power capacity has grown from 235 gigawatt to 430 gigawatt. Coal production is up from 600 million ton to 1 billion ton. Metro lines have moved from 5 cities to 27 cities. Port capacity has grown from 1,400 million metric tons to 2,800 million metric tons. We have a long distance to cover. But there is undeniable that our infrastructure has doubled in last decade. Now you look at Triveni Sangam of talent, capital, and infrastructure. Will India continue to grow? Undoubtedly, yes. Should we be happy with the current level of growth, which is high single digit? Answer is no. We must capitalize opportunity and grow in double digit like China grew during their heady days. So we should not become complacent. We should not be happy with what we have achieved. We must push accelerator to grow at double digit.
Great, Nilesh bhai. Sir, my second question will be to Vikram bhai. Vikram bhai is the backbone of actually Indian financial market. ये पर्दे का पीछे का काम कर रहे हैं. He's working behind the scene. But we are very fortunate to have him. Sir, my question is, NSE and NSE clearing are at the center of Indian growth story in financial market. NSE by far largest stock exchange globally in terms of volume. How do you see the capital market landscape evolving from the perspective of retail adoption of capital market as a means of wealth creation? So how do the retail participation can see this as a means of wealth creation?
Well, thank you, Sudhir bhai, and thank you, ICAI. It's always an honor to attend events of ICAI, as it's my alma mater as well. Sorry. So, when you look at the retail landscape, I think Nilesh bhai gave a very good picture about what the economy is. In fact, yes, we are growing at, in fact, yesterday was the MPC, Monetary Policy Committee, and 7.2% is the forecast for financial year 25. And yes, we should go into the double digits. If you look at the markets per se, Nifty, if you look at Nifty 50 last 12 months returns at about 25%. And when you compare it with, we always consider ourselves as part of the emerging markets pack. And when you look at the MSCI emerging markets return in the corresponding period of 12 months is around 9.8 to 10%. So India is poised to grow and retail cannot be away from it. And more so if I look at some of the numbers of retail spread in the ecosystem, Ishan is sitting here, one of the biggest contributors to getting investors to the market. But yesterday NSE crossed 10 crore number in terms of unique PAN registered to invest in NSE. Yesterday we crossed a 10 crore number.
Great.
And in fact, when we look at the spread of the ecosystem, I remember when we started in 2000, in 95 when the stock exchange started, but predominantly the growth started after 2000 for the stock exchange spread. When futures and options was launched and I was in the market watch in NSE, the day we did 10 crores on the volumes, we cut a cake. And within about 2 months, we cut a cake for 100 crores. Today we do, in terms of number of trades, almost 20 to 21 crore trades every day. India has about 19,000 postal codes, PIN codes in the country. And we have an investor coming out of 99.875%. It's only 30 PIN codes where we don't have an investor out of the 19,100 coming and investing in the country today. So I think we are looking at that kind of penetration which has happened. Primarily, I would say, as Nilesh bhai said, I think that growth story, when it got kicked off after 2014. Some more numbers, Nilesh bhai, I know showing numbers in front of you is like showing a torch to a sun, but very interestingly, the key parameters that we always need to monitor when we look at how the wealth in the ecosystem is increasing, how the assets are getting diversified. Till about 5 years back, of the household savings in the capital markets, the penetration used to be somewhere around 7 to 8%. Primarily, we've always been a country where the investments have gone into either bank deposits or gold. And we've seen this trajectory now change. And I'm not talking about speculating through futures and options. No, I'm talking about creation of real wealth, household savings, getting into the capital markets. I think we'll close now financial year 24, we've closed at about 15 to 16% penetration of capital market savings in the household savings bucket. And we are expecting that in the next 5 to 6 years, this is going to rise to about 23 to 24%, which is a very, very healthy trend. I think we are looking at people diversifying their assets. So yes, it is a good time. And one more thing that I would like to also make a mention is, I think, what have been the key facilitators? We cannot forget the technology evolution that has happened in the country. Our payment systems is one of the best in the country. Today, the smartphone penetration is at 71% in a country like India, which we couldn't even imagine 10 years back. Now, all these technological innovations from the government side, as well as from the payment stack, securities market stack, what you see is, today you can open a Demat account technically within a matter of minutes. Ishan, a matter of minutes, right? E-KYC or e-Aadhaar based KYC, I think, is a big facilitator. Reduced settlement cycles are a big facilitator. If I can decide to sell today and get my money tomorrow, I think that is what gets an investor to invest along with the returns. So I think it's been a combination of various factors of the government initiatives that have happened over the last 10 years, how businessmen and how entrepreneurs have actually brought their knowledge to the table, brought in new technology, and investors' interest. Wherever they see efficiency, they get attracted. So yes, I think the retail ecosystem in the capital markets is evolving and will continue to evolve as we go forward.
Thank you, sir. Now coming to Ishan bhai, as Nilesh bhai has said that business was predominantly you know, were with the Marwadi and Gujarati people. But now with the technological advancement, everybody is getting a fair chance to develop their business. And Ishan Bhai, you are one of the co-founder of one of the largest broking platform. And yes, as your primary client base is retail, how do you see the retail flow into capital market? Are they sustainable and secular? How retail investors are viewing and participating in India growth story?
First of all, thank you ICAI for inviting me here. We became one of the largest broker just last year. But our journey actually started with a mutual fund as a business. So we were actually focusing more on getting mutual fund as a product to the masses. And when we look at masses, me and we are four co-founders, and all of us come from smaller places like tier 2, tier 3 across India. And we always felt that the people in those tier 2, tier 3 towns still have enough money to invest in capital markets. Like the SIPs that people do, even today from an infrastructure perspective, we enable 100 rupees or 500 rupees SIPs as well. Why a person sitting in a small town or even a rural area can't do it? And their technology really helps. I think what we were able to do in this time was bringing a lot of those infrastructure pieces together into one app, which people were able to use it sitting at home. So infrastructure pieces including UPI, infrastructure pieces including Aadhaar, which led to eKYC. DigiLocker was a really helpful, e-sign, which helps us open a lot of demat accounts. Is all these technologies and bringing them together and putting them in a way that customer understands it, able to actually take an action on it. Because today we don't tell people where to invest and what to do, which was largely was the case when most of the brokers or distributor used to sell mutual funds and stocks. What has happened, another, which is a content wave has happened in last 6 to 7 years, which made a lot of people learn about stock market, learn about mutual funds by doing it themselves. And I think we were somewhere able to enable them doing that. And the numbers, I think, used to look very small when we started. We used to get like a average SIP used to be like a 1200, 1300 rupees. And we realized that over a period of time, people actually do not one, but 2 or 3 SIPs. So today, a typical customer on Grow will have probably 3 SIPs. Each of them will be like 2000 rupees. So it's 6000 rupees. But if you multiply that 6,000 rupees with like 1 crore customers, it's 6 crore rupees, 6,000 crore rupees coming on a monthly basis. That's how powerful the SIP has become. And we were able to kind of somewhere contribute to that scale by adding a lot more of those customers who were earlier feeling neglected in some ways. They had their money which they wanted to put in savings or today mutual funds. And what I feel really proud about is that the change in amount of household saving that has brought in from earlier to fixed deposits, which is relatively less yielding for the customers, and the participation in growth story of India has started happening by that money channeling into capital markets via mutual funds or direct investments. Today, I still feel that this is still an early stage. We will see the amount increasing, we'll see the penetration increasing, and we'll see more and more people putting more money in stock market indirectly or directly. The challenges I think that I see in future is the supply has become more constrained, and hence the cost of buying something today in stock market is very, very high. I don't know how much returns can be generated from those stock market today, but the demand is still very, very strong.
So we are lack of quality supply, quality paper supply. I think, but lot of issues are coming, SME on the main board. So, where do you see your company coming into public?
So we are a relatively young company. So we started 8 years ago. So we have raised funding from our investors over a period of time, and we've been lucky to get really good investors on our cap table as well. So we are not in a hurry. So the lucky part is that we became profitable like a couple of years back, and today we are not in a hurry to kind of get listed. But one day, definitely, we would like to get listed on capital markets, and we would want our customers to be our investors as well.
Oh, great.
Sudhir bhai, if I can just add
Yeah,
something,
please.
Nilesh bhai, with your permission. So I think now at about 20,000 crores around somewhere on the SIP funds. I remember earlier when when you used to get up in the morning, first thing that you used to see was what happened in US in the night. And if the US used to sneeze, India used to get flu, right? It was that kind of a thing. But what we've seen is this kind of flows that Ishan is talking about, 20,000 crores in SIP, and the kind of buoyancy that the domestic market now provides through those inflows. It's the other way around. Actually, on most of the days, we feel insulated from what actually happens in the West. Let Ukraine go to a war with Russia or whatever happens in Bangladesh, our markets don't technically tend to react to what happens outside. So I think that's a big change that has happened over the last few
We
years.
don't have to go too far. Recently, if you see, Indian market has fallen just 4% against the Nikkei falling 24%, Nasdaq falling 10%, and FIs were selling. But as Ishan bhai said, retail participation is so huge that entire selling by FI were easily absorbed. So Nilesh bhai, now coming to very specific things, which I think will benefit the large audience as well. Nilesh bhai, how do you see that next 10 years India growth story is going to be very strong? So which sector, 3 or 4 sector, if you can identify for our audience, that can lead this growth?
So India is a rising tide and it will lift every boat. But those boats which are rowing hard, they will lift the farthest. If we read transcripts of companies like Google, Apple, Tesla, they are putting their future on robotics. They believe majority of their revenue over next 20, 30 years will come from robotics. Now, does India have technical ability to make robotics? Answer is no. But can we supply components for robotics? We have precision engineering. In this city of Bangalore, we have invested in an auto component company, first generation entrepreneur, small company, but so good in precision engineering that when Toyota wanted to outsource their engine spare part, first time in their century plus history, they didn't find a German, Chinese, Japanese, American company, but an auto component company from Bangalore was chosen to provide that engine spare part. This is our capability. This is our home turf. Precision engineering, going into components for electronics, electricals, and for robotics will be the future. Second, if we look at, again, history of Bangalore, this is the cradle of technology innovation. In IT services, this city is home to most of the large companies. But that was related to coding, programming, application, maintenance. Now the future is going towards artificial intelligence. We are using foundation provided by other companies. And in those other companies' foundation, there is footprint of Indian programmers and developers. If we travel on the highway built by others, we will pay the toll charges. But if we can build a highway, then others will travel on our highway and pay us toll charges. Can city of Bengaluru take the lead in developing foundation program for artificial intelligence so that world starts using it and pays us royalty or revenue or toll charges? My feeling is that companies which are riding the wave of technological disruption, they will continue to do well. In food, companies who are in nutraceuticals will do well. In pharma, companies who are into modern medicine targeting specific disease according to the DNA of that person. I mean, everyone who is specializing in technology will do well. People who are not adopting to technology will be like dinosaur. No matter how big you are, you will get disrupted and eventually become Eastman Kodak company. So all those sectors which are investing and getting ready for the future through technological disruption will drive India's growth.
So elaborating more on this, sir, like precision engineering, artificial intelligence and technology, all can play their role in defense segment as well. And last 2-3 years, we have seen lot of defense companies are coming in the limelight. Even startups are coming in the defense sector. So how do you see this defense sector playing out in the next 10 years? Because now we are exporting to the, even one company I know, they are exporting bullets to US. So that kind of technological advancement we have done. So your take on that?
So one, from a purely stock market point of view, defense companies are today valued at a very, very expensive valuation. Now, will India's defense budget grow at a very fast pace? Answer is unlikely. Despite having two nasty neighbors, there is limitation of how much our defense budget can grow. With pension liability and salaries and wages, our ability to spend money on procurement of defense will be constrained. On top of it, there are many defense equipments like aircraft carrier, like fighter planes, which we will have to import. So valuations today are on the expensive side. Now, which kind of defense companies will do well? Again, companies which are geared for future will do well. In Russia-Ukraine war, we are seeing a $100 million tank getting busted with $15,000 drone. If you are making tanks, you are company of the past, a dinosaur which will disappear in some time. If you are investing in future, like making Predator drones, probably you have a future. Second, if you are only catering to Indian market, you will be constrained by budget growth. But if you are catering to the global market, you will have entire world at play. With 2 wars raging and one more expected to begin, the armament stocks all over the world are low, and which is where people have to buy bullets and explosives from a country like India. How will you supply to the globe? One, you need to have capacity. If your plants are running at 100% capacity utilization, how will you export? And second, you must have technology. We have invested in an explosive company in central India. It makes explosives which will only have sound, which will only have light and no sound. You can use those explosives in eco-sensitive terrain. They have made explosives which are twice more powerful than conventional TNT explosives. So smaller explosives but bigger bang. And third, the technology is verified by global buyers and they are exporting it to Sweden, home of Dr. Alfred Nobel. So in defense, India has a future provided we invest for technology, we have spare capacity, and we not only supply to Indian market, but also to global market.
Great, Nilesh bhai. Thank you. Vikram bhai, this question for you. SEBI chairperson in her speech has frequently talked about the technology-driven capital market ecosystem, where new India is a leader. Now India is leader. Would you like to highlight on recent tech-led development, innovation, and how we are leading the world in terms of technology, in terms of innovation in the financial market?
Yes, I think the SEBI chairperson has been very frequently recently been talking about our prowess from a technology perspective, and I did allude to that integration, how our securities market technology stack today is one of the world's best technology stack, Sudhir bhai. When I talked about transactions, I remember in 2020, early 2020, just before COVID, on a given day, if we had 2 crore transactions or trades in a day, we used to huff and puff. Today, seamlessly, we process almost about 20 crore transactions a day. And more so, if we draw a parallel to what the globe does and what we do, globally, the securities markets still continue to be fairly omnibus in nature. Okay, and we are a very segregated beneficial owner ID kind of a market. So what that means is that if Vikram Kothari is investing in the market today and I have given 1,000 rupees to my broker, entirely till the clearing corporation, I am able to track the 1,000 rupees of Vikram Kothari, his margin exposure, his trade by trade exposure, and I don't allow anybody else to misuse that fund which Vikram Kothari has provided to the broker. This all happens today with the aid of technology. So I think, yes, we have been one of the innovators, we have been leaders. And if I look at it, how this has evolved, how we have looked at technology over the last 5 to 10 years, it has been driven by 3 key parameters. One is primarily investor protection. I'll come to some of the cases of investor protection. Second has been efficiency, how we can reduce turnaround times, how we can reduce IPOs, settlement times, settlements coming to T+1. And the third has been innovation. I think we as Indians have been very innovative. Now let's look at some of the key examples which allows ma'am, SEBI chairperson, to actually go out in forums. And in fact, not only her, I'm telling you, till about 4 years back, 3 years back, when we used to travel overseas for conferences, and we do to many, we used to be in that last line listening to global players talking about what they do. And over the last 3-4 years, we are on the stage. And this is something that I had a conversation with SEBI also, and I told this is, and not only that, we are the only infrastructure institution which is now for the last 3 years contributing to research. Research predominantly globally has always been done with the likes of London School of Economics or Fed Reserve Chicago, etc. In the securities market space, they do a lot of research. But for the 3 years now, we have been presenting research papers which have started getting published. So I think a lot of things are happening. We were the fastest to go to T+1 in the world. In fact, US went to T+2 settlement cycle in 2013. We were there in 2003. We announced T+1 in November of 21, and we started transitioning into T+1 in February of 22. So just within 3 months, we could decide to change our infrastructure to accommodate a shorter settlement cycle. US has only gone to T+1 on May end of this year. So I think that's where we are. a lot of others from an investor protection perspective I would like to mention. Globally, even today also, if an investor has to provide shares to his brokers, it has to be provided via title transfer as collateral, if collaterals have to be given. The regulatory framework and the technology framework came together, and we said we had an event in 2019 with one of the leading brokers in the country, and we got thinking and we said, why don't we use technology to create a pledge structure where today the shares will lie in the demat account of the investor, he will get the demat dividends, etc., and all the corporate benefits, but he can still use it as a collateral. So I think pledge over pledge use of technology, we have been pioneers in the world, and I think a lot of our research papers are getting looked at by global regulators as well. We have discussions with regulators. Recently, we've had conference calls with at least 3 regulators in the last 6 months, where they are trying to understand what we have been doing in India from a technology perspective.
It is indeed proud to know that India is now leading in terms of technology, and academia also. Our research are now acclaimed by the Western world, I think so-called developed world. So it is really a proud moment for India. Ishan bhai, now I'm coming to you. Digitization is what appears to be fueling the investor interest in the capital market. Grow is at the forefront of this revolution. What's your view on retail ecosystem adopting this change? What are the key facilitators that have enabled you to develop a scalable and the business model which is not only scalable but also profitable?
Thanks. So I think I earlier talked about this also, that digitization is actually the primary source of where a lot of this capital flows from retail is coming. The way I look at it is 71% of Indians today have a smartphone, out of which roughly I think 70 to 80% are using some or the other content related like YouTube, etc. to learn. That's a big kind of a source of knowledge for some of those guys. Second, it gives them ability to interact with the markets without having a person in between, which requires some of the cost structure added to the whole system. So today, if a person sitting in, let's say, a E-Road or like even a smaller towns can just download an app, and the way they will get to know about that app is probably some marketing or some of their friends, and they will just click few buttons and enter their Aadhaar, enter their PAN number, and actually open a Demat account. And this will happen like in minutes. And once they do that, they will use UPI and to kind of transfer the money, and that money will then go to clearing corporation for the margin purposes, and then they will place a trade, and that trade will get settled on the T+1 basis. So today, sitting in some small place, you can have a share of any of the companies, and we have now 5,000 plus companies listed in India, in your Demat account within next day. And you can then sell it also on the next day, and the money will be delivered back to you on another one day after that. So that whole piece is somewhere the whole infrastructure that is built, and then delivering it in the way that customer is able to understand and able to kind of appreciate that this is much more safer as well. So earlier days, I think I have seen most of the mutual fund investment used to happen either through a mandate or a check. And there was always a risk that people will feel that if somebody run away with my money, right, what will happen? Today, that transparency that digitization gives to them gives them trust that whatever I am doing is what is happening to the overall system. And I think the weird way this is helping the lot of the unregulated systems to actually go down over a period of time and channel money to more regulated and more secure systems. because there used to be a lot of Ponzi schemes across India where people used to say, you give me money, I'll give you like 2x returns. I feel that those things are going down because people know that is not practically possible now. The only kind of returns which are more realistic is what you can see, what you have observed, what other people, what your friends are doing, and it's visible to you on a daily basis, or not even daily basis, actually real-time basis, is what gives them a lot more trust and power.
Great, thank you. Nilesh bhai, this is a very, very important question I am asking you. You know, when economy is moving from 4 trillion to 10 trillion, now in the next 10, 11 years, there would be a hectic financial activities. There will be a boom in the stock market, which we are now witnessing. And in that process, sometimes investors take wrong decision or forget about the proper capital allocation. So what's your advice to investor or your golden words that investors should follow in order to create wealth and take the benefit of this Amrit Kal?
So Sudhir bhai, many years ago when I started my career in stock market in the early 90s, I lost everything. Those were the days when you thought buying stock today and selling tomorrow will make you money. But then you realize that was not the case. And I was lucky I got advice from an elderly gentleman. And he said, Beta, in Dalal Street, you do Lakshmi Pujan once a year on Diwali night. But you have to do Saraswati Pujan every day. So as chartered accountant, we are disciple of Saraswati Devi. And as investor, we must remember that the way to Lakshmi Mata is through the puja of Saraswati Mata. Now everyone knows this, but collectively we don't follow it. I'm sure in this audience people are very smart, but collectively we have yet to get financial awareness. Indian household between FY21 to FY23 invested 4 lakh crore in mutual fund and 2 lakh crore in direct equity, bonds, debentures and company fixed deposit. Total 6 lakh crore, 7% of their financial saving. Sudhir bhai, the same Indians put 9 lakh crore in currency notes. No one has ever seen that if you keep currency notes at home, it grows and doubles. But collectively, all of us believe in that, and we keep 9 lakh crore at home and put only 6 lakh crore in assets which will give real return. We want to be wealthy. We work hard towards that. But 93% of our savings goes into negative real return assets or low real return assets like bank deposits, PPF, provident fund, insurance, small savings, gold, and currency notes. Only 7% goes into real return assets. We all have to ensure that we follow the path of financial awareness. This is well known to everyone, and yet people invest in currency notes. Why is that happening? In Mahabharata, just before the war was going to begin, Krishna walks over to Kaurav camp and meets Duryodhan. Krishna tries to explain to Duryodhan he should not go to war. He should avoid bloodshed. He should give 5 villages to Pandavas who are his brother. And Duryodhan replies, Janami dharmam, nachme pravrutti, janami adharmam, Nachme nivrutti. Oh great Krishna, please don't tell me what is right thing to do. What is dharma? I know exactly what is dharma, but I can't follow it. And please don't tell me what is wrong, what is adharma. I exactly know I am doing injustice to my brothers, but I can't stay away from it. If in Satyug, Krishna cannot convince Duryodhan, in Kalyug, Krishna is never going to come. And all of us need to be aware with our own Duryodhan, which pushes us to invest in cryptos, NFTs, Ponzi schemes, FNO trading, Dabba trading, and currency notes, but does not want us to invest in SIP, in mutual fund, in blue chip stocks. We all want to grow richer overnight, but we don't have patience to invest wisely and watch it grow over a period of time. So my only recommendation to chartered accountants, be our custodian of our customers' knowledge. We must practice what is right, and then we must advise others to follow the righteous thing. It is our community which has to make Indians richer by allowing them to invest rightfully.
Great. These are really, really golden words from Nilesh bhai. Vikram bhai, if you were to hold crystal ball and forecast the next upcoming regulatory changes that shall prompt the capital market ecosystem, what should be there?
I think all of us who work in the market don't know what's going to happen beyond the next 3 months when it comes to regulatory changes. But yes, over the period we've realized whatever happens, happens for good. But if I was to take some points, if I was to look at myself as an MII, today one of the biggest factors is cost of trading. Now I think one area that needs to be worked upon and will be worked upon is how you bring down the cost of trading more and more through disintermediation. Ishan, luckily you are on a digital platform, but disintermediation somewhere is going to happen. Work has already started on that. And what I mean by disintermediation is not to take the broker away. The broker should do the job that is required to do, get the client, know the client, execute, support his client in execution. Not hold his money, control his money, control his securities. If he's not an advisor, qualified to be an advisor, not to be giving advice, I think that's what disintermediation would mean. It would mean an efficient processing across the ecosystem. With the technology prowess that we have, why can't I settle directly to the client's account? And that's going to happen effective October. Why should a broker receive the shares and then transfer it to the clients? Secondly, already Ishan mentioned, we are going to see a lot of further integrations from a payment and a UPI system with the capital market ecosystem. One more big thing that will slowly become the trend is, why should a client even transfer his money to the broker? ASBA is a UPI framework is a great framework, and why it cannot be leveraged for the client to actually have the money in his account and actually trade and settle. So I think that's the kind of framework we are looking at. But more importantly, I think we are already at T+1. T+0 is in the beta version. Very soon we are going to see us being again one of the first countries which will settle on T+0 across all securities. That's if I look at the crystal ball, I would want it to go there. Let's have the capability to do it, and let's give choice to the investor whether he wants to get his money on T+1 or whether he wants to get his money on T+0. Somebody jestingly asked me, when is instantaneous going to happen? If I have my way, pretty soon, why not? If somebody wants to sell a share and get his money in 5 minutes, having faith on our technology capability, it should not take us more than a year to get that done. So I think that's another thing that somewhere will be on our glide path. Apart from that, I think one of the big things is a lot of integration of artificial intelligence into surveillance mechanisms, investor protection mechanisms, what is happening around insider trading, to make the investors more educated, more informed. As Nilesh bhai said, everybody needs to, tomorrow Krishna is not going to be out there. So I think we as an ecosystem also need to create that framework of knowledge and investor awareness, and maybe assist them through all the tools that are out there. So I think that's what I would, if I was to look at a crystal ball, that's where I would point it to.
Great, great. Thank you. And Ishan bhai, you have majorly disrupted the way which people used to trade or people used to invest. Now this journey which Amrit Kal has started, and India would be $10 trillion economy by 2035. So what sector do you see will be disrupted, led by technology or AI?
I think technology is already disrupting almost all the sectors that are there today. I think I look at AI as a even better technology. It's not like a new, it's also a part of technology, but the difference in AI and what earlier was there, or generative AI, what it is called today, is now more subjective things can also be solved using technology. Like we talked about, Vikram bhai was talking about surveillance, for example. Surveillance today is a very manual exercise. And when you are looking at data, people are able to interpret it in a different way. But I feel there will be a time when some of these things can be done with AI much, much better, because now AI will be able to add subjectivity to it, whereas today technology is very, very objective. When I say objective, is that you tell the code that if this happens, then do this. They will not think about, if I do this, will it change something else or not, right? So that kind of second level thinking will start happening in technology itself. And we will see systems which are probably significantly more reliable than what it is today. And those reliability will increase dependency on, let's say, a person who was managing it earlier to a self-sufficient system over a period of time. So that means everyone where there is less value add work being done is all the industries which will get disrupted, which include probably where the person, anyways, I think some of them are already getting disrupted, but it will be probably faster now.
Thank you, sir. And last quick question to all the eminent panelists, starting from Nilesh bhai. Nilesh bhai, now we know that Amrit Kal has started, and next 10 years really would be Amrit Kal, and India growth story will, grow further. But then we should not forget about the risk. So what are the risks do you see, apart from political disruption that might happen? So what are the risks, and how we can manage the risk as an investor?
Sudhir bhai, our only risk remained risk of self-goal. We become complacent and we score self-goal. And this particular hall, if I see, it shows how good we are and how bad we are. For example, a decade back, in this hall, we'll have only incandescent lights, not LED lights. They were consuming a lot of power, they were providing a lot of heat, and hence there was need for more air conditioning. And by moving from incandescent bulbs to LED, we have reduced power consumption, we have created more brightness, and now power deficiency or power shortages has come down from double digit to 0.5%. But in this hall, I believe entire power is through DG sets. There's no power connection. I don't know the reason, but I do know that running DG sets to power is environmentally unfriendly and very, very costly. Now, can we not provide power connection to this ground and avoid DG set? Well, your answer will be far better than mine. as I don't know details. This is our real challenge. Our ability to score self-goal. And on an industrial side, you could see self-goals between Singur and Sanand. Tata Motors wanted to set up car factory in Singur, struggled for decades, couldn't set up, finally moved out. What is Singur today? An underdeveloped place, no development, no jobs, no growth. Tata, when they moved out of Singur, moved to Sanand, got quick approvals to set up factory. In 18 months, Nano started rolling out. Nano didn't do well, but Tata Motors took off there. Maruti came. And today when you go to Sanand, you see jobs, development, growth. We need more Sanands and less Singurs. That's how we will achieve $10 trillion and beyond. If we score self-goal like Singur, there is limited hope for us. If we score goals like Sanand, no one can stop us.
Great, sir. Same question to you. What are the challenges and risks to our Amrit Kal? And how we should, manage this risk as an investor? Or maybe on the regulatory side, what are the challenges that will come?
No, I think
and how you will manage them?
I'll try to answer the first one, Sudhir bhai. I think over the last 8 to 10 years, when we talk from a capital market perspective, we as investors, I'm not talking from an MIA perspective, but we as investors today have seen more or less one-sided kind of a market, a very serene one-side kind of market. Most of the investors, if you look at it, we were at about 4.1 crore demat accounts in 2020. We are at about 15 crore demat accounts. So most of the investors have come in the last 5 to 10 years, and we've seen one side of market. We have not seen the kind of political volatility, the geographical disturbances, the kind of economics that is playing out, and the kind of volatility that comes with it. The last kind of volatility most of us saw, and most of them did not exist in the market, was as way back as 2008 years. In fact, most of the volatility models in the market also don't look beyond 10 years. So I think it's very important that we as investors keep wind of how, and we track what these events are going to be playing out as. And I think that's the biggest risk that I see in the market, that the investors are not used to the kind of volatility that might come into the markets.
Last question of this session. Now, Ishan bhai, same question, what is the risk to India's growth story? What is the risk to retail participation moving away from the capital market?
Yeah.
What are the challenges now as an investor we can mitigate that?
So I think from an India perspective, today where we are in a situation where we have a lot of potential that is sitting inside. We have a lot of infrastructure that is already developed. We are in process of developing a lot of that infrastructure. But I think this is a unique opportunity from an external perspective as well. Today, India is going to get a lot of benefits because a lot of the other countries around us are not able to deliver value to the world today. And the biggest risk I see is we miss this opportunity and we get somewhere late in actually capitalizing that opportunity. I feel even in next 10 years, probably the next 5 years will be a lot more important than the next 5 years after that. And if we are not able to capture a significant portion or the growth rate that we talked about, we should be running at a double-digit growth rate in next 5 years, and then probably come down to a slightly slower number, will be a much better capitalization of this opportunity, because you don't know after 5 years if somebody else or some other country starts performing better or something else changes from a geopolitical perspective. Today, I think it looks like puri kainat इंडिया को ऊपर लेके आने की कोशिश कर रही है और we should be the ones who should be kind of working hard and making sure that we become third largest, if I would say even faster to kind of second in over next 5 to 10 years.
So definitely, as Deputy Governor of RBI said, that now our growth rate is 6 to 7%. But if we manage to grow at 9 or 9.5%, we would be the third largest economy in next 7 years. So we hope that we become the third largest economy by 2031 and 4 trillion to 10 trillion economy in less than 10 years. Thank you for patient listening. Thank you very much.
I agree, Krishna is directly not here with us, but through all of you, we are constantly getting his guidance to all of us, sir. Thank you so much. May I kindly invite CA Arun AV, Regional Council Member, to deliver the closing remarks for this esteemed panel discussion.
Good morning to all. The persons on the dais and off the dais and panelists from various fields like Nilesh boy and Vikram boy and Ishan. Thank you for the wonderful discussion. I think India's growth story is now in the phase for accelerated growth that supported by technological support by grow and other technological support. So I think we have a lot of place to grow because we cover only 15 crore people in demat accounts and only the 10 to 12% people through mutual funds. So in the country like India, we have more than 130 crore population. We have a lot of space to grow. I think the data point they touched upon, various data points touched upon by the Nilesh boy and Vikram boy and Ishan is very good. We have a lot of opportunities to grow, and thank you for panelists for giving a lot of scope for the professional like us. Thank you all.
Thank you very much, CA Arun sir, for the closing remarks and the summing up. Indeed, we have witnessed the Saraswati Putras who have been acquainted with knowledge and vast experience. This session would be truly incomplete if we do not express our gratitude for the exemplary knowledge, the gyan that was shared in the discussions. I now request CA Manjunath, the Vice Chairman of Bengaluru branch, to present a memento to CA Nilesh Shah, the Managing Director at Kotak Mahindra Asset Management Company Limited.
A huge round of applause, ladies and gentlemen.
Indeed, we have witnessed the vast experience of decades together from CA Nilesh Shah sir. We are truly overwhelmed and have the pleasure to have you with us today. I also request CA Tuppad Virupakshappa, the Treasurer of Bengaluru branch, to present a memento to CA Vikram Kothari, the Managing Director and CEO, NSE Clearing Limited. It was indeed a pleasure to have you with us today, sir. Your knowledge, your expertise as the CEO and the Managing Director of NSE Clearing Limited has been witnessed by the delegates. I request CA Shripad Hulgol Narayan, the SICASA Chairman of Bengaluru branch, to present a token of our appreciation to Mr. Ishan Bansal, the founder and CEO of Grow. It was indeed a pleasant delight to have you with us today and you sharing your knowledge as a dynamic and young panelist on the entire panel. I also request CA Manjunath, the Vice Chairman of Bengaluru branch, to present a memento to the wonderful and exemplary moderator, CA Sudhir Bheda, who has shooted questions to the panelists and tried that our delegates get the best out of all the three exemplary Saraswati Putras. Once again, thank you to all the panelists and the moderator for this wonderful session on India's growth journey, capital markets in Amritkal. Thank you once again.
There can be no better way to begin